Hello and welcome back to Bunnex Investment Group. In this video, I'm going to give you a levels counting masterclass. And what are levels? They are basically impulses that gives us more information about where the market may take us next. All right, so basically what we are going to do is I'll start by defining what the market maker cycle is. That is for the purposes of those who do not understand what it is. All right, so basically the market maker cycle is actually a move or a flow that leads to reversal, or basically a move or a flow that leads to the prior trend being terminated. So basically, if we see the three impulses in one particular direction, we expect to see the market to give us a reversal. So levels will actually help us to understand where we are in a particular cycle. We can see this is on H1 time frame, day of rise, day of rise, day of rise, and we got this M pattern, which we call a midweek reversal pattern. After that, we can now expect either three levels to the downside or basically a few levels to the downside, and we start to continue to the upside. So we can see that we had 1, 2, 3 impulses. We had our midweek reversal pattern, which is in form of an M pattern, and after that we can see the market started to count again to the upside, 1, 2, and 3. But how do we define, or how do we separate expectation to see the market give us three levels to the downside versus it giving us what we call a reset, which is a restart? That is now what I am going to explain in depth. All right, so this particular trading system, or this particular levels counting, is going to allow you to trade anything of your choice. It might be indices, whether synthetic indices, whether US indices, or oil or gold, anything of your choice, even cryptocurrencies. All that you need to do is to follow the exact process that I'll show you in this particular video. The first thing that you are going to require is to understand where the market is on the higher time frame. Because if you are going to make decisions on H1 time frame, like in this particular scenario, you are definitely going to make decisions that are not going to hold for long. Of course, here and there, you will get winners, but most of the times you will be actually losing. So I see a lot of people actually going on the M15 time frame, and on that M15 time frame, they try to make a decision in this particular instance. You are likely to going to lose because you do not understand what the higher time frames are actually telling you. All right, so I love to start on the highest time frame, right? Using this particular way, it's going to let me know where the market is going to move next for a long period of time, such that when I enter, my trades are going to satisfy a good positive reward to risk ratio, right? So on the monthly time frame, what do I see? If I zoom in, this is the data that I have from my broker. This is a demo account on HFM. So my broker has data up to down to 1997, but I do not need much more data, because all that I am seeing here is there is almost a cycle that is visible on the monthly time frame. So when you come to any time frame, all that you want to do is you are going to mark these impulses. We can see that there was a drop of the market, which is an impulse on the monthly time frame, right? So this is a drop, and then we can see another drop to the downside, meaning that we now have two levels in one particular direction. Then the market maintained this low right up to this particular point, where it actually broke structure to give us the last drop to the downside. If you have been listening attentively when we started this particular video, I said when we see three impulses in one particular direction, we know that there is a reset coming, or either a complete total reversal, right? So the monthly time frame has just told us that the cycle has been completed on the higher time frame. We have level 1, level 2, level 3, market maker cycle completed. What do we expect at the end of the market maker cycle? Like the illustration that I gave you earlier on, we've seen that after three levels on Euro USD H1 time frame, there were three levels that I showed you, and at the end we had an M pattern. So in this particular case, this is a downward trend. So at the end, we got a W pattern. So after that, we now need to switch to the weekly time frame, right? So still on that, we say when we get one level on the monthly time frame, we expect to see 3 levels on the weekly time frame, right? One level, this level on the monthly is equal to 3 levels on the weekly time frame, meaning that within this particular box, if we switch to the weekly time frame, we are supposed to see 3 levels of the weekly time frame. So that's a concept that you need to carry over all the other parts that I'm going to explain. So on the weekly, we expect to see 3 daily. On the daily, we expect to see 3 H4. On the H4, we expect to see 3 H1, just like that. So in this particular instance, the second step is now to go on the weekly time frame. On the weekly time frame, we are basing, or we are actually starting from a data, which is the lowest point, which is basically a W pattern that we've seen on the monthly time frame, right? So there's not much that has been shown within the weekly. We can see that the W pattern is just bigger and magnified on the weekly time frame, but we cannot see levels haven't been issued yet. So the next thing is now we now need to go to the daily time frame. On the daily time frame, where are we starting from? This yellow line that I've provided on the second leg of the pattern that we have seen. So in this particular instance, we can see that from this yellow line, we had the first impulse to the upside, right? First impulse to the upside, then second impulse to the upside, and a possible third impulse to the upside. So I'm going to mark the levels of the daily time frame like in this form. We can see first rise. After that first rise, we can see the second rise. After that second rise, what do we see? A possible third rise, right? So still at this particular point, here I now can answer you. When we get to third level and get a reversal, how do we know if we are going to reset or get a total reversal of the market? Whenever the market, so the answer to that question is whenever the market has not yet completed the higher time frame. For instance, you are viewing the H1 time frame and it hasn't completed its cycle of the H4 time frame. It means the H1 is going to reset and continue, right? So in this particular instance, we have these flows to the upside basically like that. And within these flows, we've said if we are on the daily like what we are right now, we expect to have 3 weekly levels or 3 H4 levels within these particular daily levels. If we get 3 H4 levels, we also expect 3 H4 levels within this particular flow. So going down to the H4 time frame, this is what we can see. On the first level of the daily time frame, we can see there is a week of rise, pullback, week of rise, consolidation, and the last week of rise. So if we are to mark the levels, we are going to say an impulse, a clear impulse, and let me change the color. We can see this is a beautiful clear impulse to the upside, level 1, and then we had this as level 2. And if we are to check, we can see that the high was held. So there was no break of this high, meaning that all that followed was consolidation. Then we can see the third push to the upside, basically like that. At the end of the third push, what do we expect? We expect to see an M pattern or a W pattern depending on the market context. Like in this particular case, we had a beautiful M pattern. It's also tradable. So in that instance, we are saying when we get a peak formation high, how do we know if we are coming from this particular point and have a total reversal of the market? That is where I'm saying if the higher time frame cycle is not yet completed, we continue going to the upside. So it's 3 sets of 3s that should be satisfied each and every time. So in this particular case, we had a reset and a start again of the count. We can see that we had the first rise, and after that first rise, we had the second rise, and then the last rise. what did we get at the end? In this particular instance, we were expecting to see an M pattern, but unfortunately, the market can vary the theme and provide what we call an inverted head and shoulders or a head and shoulders pattern. Like in this particular case, it was an inverted head and shoulders pattern. And then we start again our count. So in this particular count, what can we see? We can see that we have been issued the first week of rise to the upside. And then after that first week of rise, we can see that there is a possible, the high was held. And then after that, we can see that there is this particular rise. We'll actually verify when we go to the smaller time frame. So how is it now going to look? We can see this is the daily time frame. On the daily time frame, how are we going to make our decisions going forth from this particular point? We can see that there is the first daily level, and within the first daily level, we've managed to mark 3 levels of the H4 time frame. Tick, this is a valid daily level. Then this is another daily level. We have managed to mark 3 levels of this particular daily level. Tick. Then in this particular instance, we are expecting the market to complete on the daily time frame. So this is what we are expecting on the daily time frame. And within that, how many levels are there for us to get this particular scenario where we are going to get the last or the end of the daily time frame? So for us now, we've said within one higher time frame level, we expect to see 3 levels of the lower time frame. So we now need to go on the lower time frames to check if these are actually valid levels and are actually completed levels, so that we can know and expect and find what to expect. So going on the H1 time frame, this is how it looks like. In the last, this is the last daily, right? So the H4 level that we've marked, we can see there are clear levels that are being presented. I'm going to use red for the H1 levels. So this is first day of rise or level 1 to the upside. And then after that, we can see the second day of rise, which is this one, or the second level. And then we had the third level like that. So 3 levels to the upside, an M pattern has been issued. And then we can, since we haven't completed, a reset was issued, and then we start again. So within this particular phase, that is where we now want to verify, as I've told you. We can see that there is the first rise. Then after that first rise, there is the second rise. After that second rise, or impulse 2, higher high, higher low, then the third rise. After these 2, we can see there was a completed cycle, meaning that the H4 level 2 is supposed to end here. Therefore, with that in mind, we now have our H4 level 3 to fulfill our daily time frame, daily time frame level 3. So this is what we've seen. So within this, that is where we are now interested. If we go back on the H1 time frame to see how it is actually performing, we can see there is the first day of rise, second day of rise, and I will be expecting to get the third push to the upside. So in this particular instance, if we are to mark the H1 3 levels, we can say this is first day of rise, then second day of rise, and I will be expecting to see the third day of rise. So these levels are basically for bias building. We are building a bias so that we know where we are going to make an entry, where the market is likely to give us a reversal and so forth. So in this particular case, the daily time frame that I'm expecting will be much smaller, but there is likelihood for a higher time frame consolidation, which is formation of the higher time frame, the daily time frame. Since the daily time frame would have completed, we expect that it will create its own peak formation high. And the peak formation high for the higher time frame will be very, very long and highly consolidative. So when you are trading at that particular point, you need to understand that it is a trade that will take long. So this is basically how to count levels. Entries are actually a separate entity within this particular subject. Entries will actually require you to know where the market is going to, whether the market is going to reverse or whether the market is going to continue. With that, check out my free Telegram channel. I'll leave the link in the description box below, and I'll see you in the next one.